Welcome to the Midday Market Update for June 11th, 2020. My name's Kevin Hill, as always, sitting here with Michael Vincent. And
Good afternoon,
this is
everyone.
our twice-weekly show on the freight markets and what's going on in the logistics world. And Michael Vincent, I believe it's interactive, isn't it?
It is interactive. It is. So get your questions, comments in on FreightWaves LinkedIn and Facebook channels, and we'll get them answered and as best we can.
We love comments. LinkedIn
Yeah,
is up
absolutely.
and working today, so that is a big boom. So if you're listening right now or watching on LinkedIn, drop us a line. But we have a great show for you today.
We do.
Some awesome guests. At 12:30, we have Hunter Whirley, managing partner at FPC Riverwood.
That's right.
Executive recruiting firm. And we will talk about the job market in both transportation logistics as well as other shipping industries.
Yeah, across the board. He has the logistics as well as manufacturing, et cetera, across the board. So what has been going on through the crisis, and what does he see going on right now? So.
And then at 12:40, we have our very own Washington Bureau Chief at FreightWaves here, John Gallagher, talking about the new developments or the legislation and a survey that we did here at FreightWaves on guns and trucking and kind of what that would look like if it was ever legal to have that federal concealed carry across states and what companies
the
might
reciprocity
do.
law.
Yeah. But first of all, we're going to kick it off with Andrew Cox, our research analyst here at FreightWaves, who's going to be covering the headlines on FreightWaves.com. And then we'll have Zach Strickland, our director of freight market intelligence, here talking about the freight markets. And then our lead economist, Anthony Smith. And we are going to talk about initial jobless claims because you know what, Michael Vincent? It is Thursday.
It is.
And that's when those come out each week.
Yeah.
And it's getting better and better and better. Still not what anyone would call great
getting
numbers.
Less terrible.
But it's getting much
that.
less terrible each and every time. But first, Andrew Cox here with the headlines. And our opening headlines today is Bob Voltman, longtime TIA CEO, is stepping down.
Yeah.
What do we have there, Andrew Cox?
Yeah, Kevin, Bob Voltman, the longtime CEO of the Transportation Intermediaries Association, has stepped down. Voltman led the association for nearly 23 years, but has probably been forced into the public eye more in the last few months than he has at any time in his tenure. And that's basically because of the low rates that drivers have been facing due to the COVID-19 pandemic. We've seen, and we've talked about here on this show, about the drivers that have been protesting down in Houston at times. There is a lot of tension right now between brokers and carriers. The TIA is the trade association representing third-party logistics providers in the industry. They have over 1,800 companies as members. Bob Voltman said the industry is still in great shape. In an interview with FreightWaves, he says it has weathered the economic downturn because that's what these guys do. They arbitrage imbalances. Voltman is exiting at somewhat of a controversial time during which the freight rates have plunged due to the COVID-19 pandemic. As drivers descended on Washington and the Owner-Operators Independent Drivers Association issued statements demanding transparency from brokers under the current law, Voltman issued an impassioned defense of the 3PL industry. In a 3.5-minute video, he basically stated that brokers don't make the rates, the market does.
Yeah, Andrew, was there any indication of why he was stepping down?
It was unclear. We don't know if, in fact, he will be retiring. He has, of course, been leading the association for more than 20 years. We don't know what his next move will be. We just know that I don't want to put words in his mouth, but he has had a lot of public pressure on him in the last few months. Yeah,
in that article, you know, some of the things that he talked about, just real quick. Yeah, I'm going to have Jason Miller, Associate Professor of Logistics at Eli Broad School of Business, Michigan State, on freight forecasting later today. And one of the things we're going to talk about is this. And Voltman talked about it a bit. I wouldn't throwing shade at shippers, but cautioning shippers, because right now rates are low, right? And they're trying to pull forward their and do contracted and lock in these lower rates right now, which is a tricky thing as the recovery comes. What happens later when things pick up? It could be disastrous for both sides, or present challenges for both sides. Let's say, and he made that plea out there, and the statement, shippers, things are great right now, but don't forget that kind of swing capacity out there in the spot market that you're going to need come the fall.
And a lot of this was, the big arguments and contests out there in the public sphere. OIDA got into it.
Yeah.
It's kind of one of the responses from that the TIA was responding to, and that was at the beginning of the shutdowns.
Right.
So load volumes collapsed.
Yeah.
And once load volumes collapsed after that run up,
after the
market prices collapsed as well.
Yep.
So it was a really painful few weeks, and it still drags on a little bit right now for the industry. But it kind of highlights it was Voltman and also the carriers were able to get that out into the public sphere about how the market dynamics really work and really raise the profile of the TIA and freight brokers in general. We have a couple comments here from viewers. Renee and Christopher. Hello there, guys. Finally good to catch one live. I'm super excited. Thanks for listening. And Kenneth Carter. Own the day, guys. Own the day. You too, Kenneth. You too.
JC3.
Yes.
Inspirational.
Yes. What's our next headline, Andrew?
Yeah, Kevin, the next one is from Todd Maiden. It is on YRC Worldwide. They provided kind of a brief update to their shipping and yield metrics for the first 2 months of the second quarter of 2020, and the numbers do raise some concerns. The LTL carrier reported an 18.6 year-over-year tonnage per day decline through the first 2 months of the quarter, with revenue per hundredweight, or their yield, declining 6.3%. The carrier reported 22.6% year-over-year decline in April tonnage, and the yield moved almost 6% lower in April. May tonnage has been slightly better, only down 14.5% with a 6.7% yield decline. YRC's results imply a revenue per day decline in the high 20% range during April and the low 20% range in May. This is quite a bit worse than their big competitors, ArcBest and ODFL, which saw year-over-year revenue declines around 20% in April and in the high teens throughout May.
Wow. Can you run through each one of those percentages one more time, but quicker this time?
Yeah, of course. I mean, if you want to. It's a big number jump, huh?
Seriously, the point is this. Through all that and all these percentages, up and down, and comparing it to ArcBest and Old Dominion and competitors, et cetera, it's not really much of a shock, is it?
No, I mean, it shouldn't come as a shock that the LTL is not doing so well. I mean, we are seeing a lot of consumer goods being moved. I mean, the consumer spending is pretty strong. You'll see that in the PPI this afternoon. But yes, from an LTL standpoint, things are bad across the board.
Yeah, I mean, it seems like they're and Kevin and whomever, if you want to comment on LinkedIn or Facebook, that'd be great, or questions on this. But in the LTL world, it's not just that truck is moving, but it's the freight mix that's on there, right? And we talked about this before. 20% of the market of your business drops out, which 20% can be hugely detrimental and change. Weight per shipment can go up, but the revenue per weight can go down, which destroys profits on those different loads and the profitability or contribution to margin on specific freight. All that it's a science art that our own Zach Strickland, Director of Freight Intelligence, he lived that quite well and understands that quite well. When you lose just 20%, bang. It's very difficult to navigate.
And LTL is very closely tied to small businesses, or at least that's the
sure.
That's the
more so
that's
than
what people
truckload.
say. Certainly. So basically, small businesses across the board were part of non-essential industries that had to shut down. So LTL, I think, took a much bigger hit than full truckload during certainly the last few months. So it'll be interesting when Q2 earnings come out here in July and August, just how much of a recovery and different reports coming in too. So it's kind of a market influx.
Yeah. Absolutely.
Yeah.
Absolutely.
So our next headlines, Andrew, is about Tesla and Nikola. And is Nikola kind of pushing Tesla to accelerate some things?
Well, that's certainly something to question, Kevin. Just yesterday, the first report was by Reuters. They kind of an internal memo was leaked by Reuters there, and it was about Elon Musk coming forward and saying that it's about time to go all in on the Tesla semi-truck production. This is a semi-truck that has been delayed multiple times in 2019 and has just been kind of pushed out. The first deliveries are expected to be 2021 after launch delays most recently. Limited production is expected this year, Musk said on the Tesla's first quarter earnings call, and the memo quoted, "It's time to go all out to bring the Tesla Semi to volume production. It's been limited production so far, which has allowed us to improve many aspects of the design. The production of the battery and the powertrain will take place at the Giga Nevada, with most of the other work probably occurring in other states." And why you mentioned Nikola is that it is a little bit of a timing coincidence. Just last week, Nikola started trading under their own ticker NKLA last Friday, and they've made a lot of buzz in the last week with the release of some new image releases of their truck, as well as their semi-truck. So you got to think that that's kind of weighing on Elon Musk's mind is when he releases this so timely.
Yeah, I would think so. I don't think it's coincidence in mind. I see the question mark there, so I'm going to answer with my own opinion. I don't think it's. I don't think it is at all. I mean, he's noted as calling fuel cells fool cells, right? And that's one of Nikola's big things is the fuel cell. And in fact, hydrogen. Is it not? That's the U.S. base is going to be fuel cells with the 800 trucks with AB InBev, et cetera. Isn't that the fuel cell thing? We talked with Trevor Milton last Friday on what the truck. Friday. You can catch that on FreightWaves TV if you go back and look at that. It was quite an eye-opening, a very, very interesting talk.
Yeah.
And you also have Tesla. When you look at the numbers, right? AB InBev has like 15 Tesla trucks on order, 800 Nikola. Pepsi's got like 15 Tesla on order, et cetera. So I don't think it's a coincidence at all. I think he's trying to.
Yeah, we'll see.
He's a showman.
We'll see if they can ramp up the production. It's not hurting. Nikola coming out public isn't hurting Tesla's stock prices. Andrew, I think it traded for above $1,000 a share for the first time yesterday.
Yeah, that's correct, Kevin. This has not affected Tesla at all. They traded above 1,000 for the first time. And Trevor Milton actually came out on Twitter yesterday, speaking of the release, this leaked memo, and said that it's not a bad thing for Nikola, for Tesla to be moving forward production. It's actually a good thing. Their end goals are the same, and that's to create zero-emission trucks. So competition for him is a good thing in his mind.
Yeah, Trevor Milton. He spoke well of Tesla on what the truck as well. He did. He's a true leader.
Why don't we switch over to the rail and intermodal markets? Have we bottomed there, Andrew?
Yeah, Joanna Marsh did report and is questioning if the rail volumes have bottomed. They're likely to rebound in the second half of the year, but the pace of the rebound will largely depend on consumer confidence. Executives from several Class 1 railroads cautioned at a recent investor conference. There is little visibility in terms of how the consumer is going to re-engage, says Jennifer Hammond, Chief Financial Officer at Union Pacific, at a conference sponsored by Deutsche Bank on Tuesday. Hammond also spoke at an investor conference sponsored by the investment firm UBS on June 2nd. Although international intermodal volumes have fallen by about 16% quarter to date amid the canceled vessel sailings from the U.S. West Coast, the railroad is feeling a tad bit more optimistic amid expectations that volumes might have bottomed out in April and May, Hammond said just at that UBS conference. However, she said it's also very difficult to call because it's hard to gauge how U.S. consumers will respond to the easing shelter-in-place mandates, and so there's a lot of question marks that still need to be answered.
Yeah, it's really yet another industry where we're looking at there's some positive signs. You know, as Mike Bowden-Distel this morning on FreightWaves Now was talking about rail, and I believe, and I've got it. Let me pull it up here so that I'm not wrong. But so the domestic rail cars. Boxes have bottomed out like April 16th or 17th, and they've been rising pretty steadily since on the domestic side. The international boxes is what's down, and we see that in the imports. The imports being down.
We do, and there's something that Zach talks about quite a bit on the port traffic, and right now most of that's moving full truckload rather than the intermodal, kind of that expedited service, but that should flip at some point.
Yeah, when you're restocking those inventories and so on, it's coming out of those warehouses. They're choosing long haul over rail, it would seem, but it is spilling into the rail, if you want to, or it's spilling the opposite way, whichever you want to look at it. But domestic rail boxes are actually up, nowhere near last year's average, but they are up. There's positive signs there.
Yeah. Well, let's check out what Zach Strickland has on the trucking market right now. What do we have in SONAR, Zach?
Yeah, so we continue to see, to my surprise, the tender volume index continues to rise, somewhat accelerating here over the last day or so. Now, I don't put a lot of stock into a single day acceleration by any means, but at the same time, we're moving at such a divergence from, the 2018 pattern now, whereas it looked like we were falling into a more seasonal pattern where volumes were kind of having this early June kind of push after Memorial Day, and then they flatten out for a little bit. Now we're jumping back up again, but it is a little bit different from 2018 in the way that the tender rejections still remain very subdued, more around a 2019 style pattern.
Hey, Zach, you talk about tender rejections. How much have we moved in the last, say, 8 weeks or 4 weeks? Give the audience a sense of the movement there.
Yeah, tender rejection rates have climbed basically from sub 4% to about a little over 5.5%. So it is not a strong move whatsoever. It has been a very slow grind. From that, anytime you see a tender rejection rate around a 3.5%. That just means there's almost no spot market activity whatsoever. There's very little upward pressure on rates on the spot market. Contracts are being adhered to religiously. And to me, I think you have to also pair that with the volume that's involved. I think a lot of Wall Street traders will also agree with this. You have to always look at what is that tender rejection rate on, or what is that trading market value on? If you have a lot of volume trading at a high rate, that has a lot more significance than a lower volume trading at a high rate. So, to me, we're seeing this divergence where we have a high volume and we have a low tender rejection rate. It's a very interesting time to see carriers gobble up as much freight as they can. Now, there is a little bit of an explanation here in terms of why we're seeing, the rejection rate stay subdued in relation to the tender volumes, and that's due to the fact that we've seen an increasing amount of local freight interlaced with the tender volume index as compared to the long haul volumes.
I was going to ask that point. We were discussing that earlier today when we saw that large spike early on, right, with the preponomics and panic buying and so on, and we saw this huge and then drop off. But during that, rejections went up. Right, and now we're seeing a rather steep incline and way above 2018, but nothing. It's not all just capacity, right? It's what is moving and where in those lanes. Is it more regular routes as well as because we were talking about fragmentation and moving these long haul routes, and then you're winding up in places where you don't normally wind up. You don't have those backlog or back loads to get back, and so you're out of position, right?
Yeah, no, that's exactly right. The local freight, we define it as anything moving under 100 miles. So, you can run several of those in a single day if you need to. So it's not the same thing as running that LA to Elizabeth, New Jersey run where it takes you multiple days, team transits potentially, and you're going to have to find a lot of, it's just a lot of mileage to cover, and to time everything exactly right, going that length of time on the road and having a pickup available for you. It's just very difficult to manage all of that at once. The local freight, you can stack those up in a day, potentially having a couple of runs, and it just does not have the same impact to capacity that those longer haul freight moves do.
Gotcha. Hey, Zach, we have a viewer question here that goes with those local routes. I think it will segue very, very nicely into that. It's from Cody Cutright, sales account manager at ArcBest, and says, "Happy Thursday. What modes of transportation do you guys anticipate Tesla having the biggest impact in?" And my bet would be those shorter hauls under 100 miles, local LTL type of moves. What are your thoughts on that, Zach?
Yeah, I mean, the automotive sector is turning back on now. Tesla obviously has, in that space. I think that they're going to have significant impact it's a lot of local haul, regional haul moves, like you said. They normally set up, a lot of their suppliers are set up within that region. Now, I think that Tesla actually has a few suppliers a little bit more spaced out than your standard automotive provider would. Again, a lot of People up in Detroit, where we've seen a lot of the activity turn back on recently, they have a lot of sourcing coming in from Mexico and Canada. There's kind of this thoroughfare of activity through there. So Tesla relies on a little bit of an overseas presence positioned out there in California, as well as some Nevada factories. So again, regional movement should have a big impact, I mean, there in terms of that. But I would be watching the ports more than anything.
Yeah. Sorry, I should have clarified. The Tesla semi-truck is what I think he was talking about.
No, but I was interested anyways. There's great insights anyways.
Yes.
Yeah, no, right now, I mean, the Tesla truck, I mean, we're still a good ways away. It's going to be the drayage, the ports. I mean, it's kind of the same answer, but for different reasons. Any of those trucks still don't have the battery life to go a longer haul. So again, as they develop that technology out, you're talking about a lot of local haul freight movements, very consistent freight patterns. I think the LTL and the drayage providers probably will be the first to benefit from that the most, but the regional carriers as well. I think that they, anybody moving about 250 miles shouldn't have any trouble operating on the electric.
Sounds good.
Yeah, excellent. And I guess that's kind of different than the hydrogen fuel cell that Nicola's looking at. That's the United States portion of theirs, right? Is the hydrogen fuel cell in Arizona, and they're building actual infrastructure stations along the routes of their largest customers like AB InBev. And so maybe that has more of an impact on long haul because of that, right? On a different market.
Before you go, Zach, can you let us know a little bit about produce and the refrigerated market?
Yeah, so the produce market is still kicking right now. You know, we talked about it a little bit on Tuesday, where a lot of those hauls, a lot of that freight is moving in a very consistent pattern. We are seeing spot market rates inch their way higher. Reefer rejection rates in California are hovering steady, however, around 22% right now, which is relatively high, especially in comparison to the rest of the country. But we're still seeing a lot of strawberries coming out of that Central California Valley. We're seeing everything else pick up in Southern California, the avocados. You've got the lettuces, romaine and iceberg, both moving out of Central California as well. California is really strong right now in terms of produce movements, but it's not creating huge spikes in rates, but they are having increased rate pressure as we speak. Florida, again, has a little bit of a mixed signal here. We don't see a lot of impact to capacity in the southern and central Florida markets right now in terms of contracted reefer freight, but we are hearing some reports of tightness as it is watermelon season out there.
Thank you very much for your insights today, Zach.
Thank you, Zach.
Yes. You know what sounds good? Strawberry shortcake. You said strawberries, and it's like,
Your reaction was to start. Mine was avocados.
Yes.
I love avocados.
Now we have Anthony Smith joining us, talking about initial jobless claims and other economic data that's out this week and what's coming, and then next week. What do we have on jobless claims today, Anthony?
That's right, Kevin. So it's Thursday, and that means another update for jobless claims. And what we saw in the latest numbers for this week was that there was a total of 1.5 million applicants for initial jobless claims. So this maintains the downward trend over the last few weeks, over the last 10 weeks indeed. And so it's still showing that there's a decline coming down as more and more economies are starting to open back up. But yet this is still a very high number when we're looking at the grand scheme of everything, of 1.5 million Americans still applying. But again, this is down for I think the 10th consecutive week. So we are moving in the right direction, but it's still a very high number overall.
Is this number above or below the 4-week moving average now? I think we have enough data, certainly on initial jobless claims, to have that be a really good piece of data.
Yeah. So when we're looking at the 4-week moving average, it totaled out to being just shy of 1.9 million. So the volatility is smoothing out there. There is some downward movement. The other big thing that we saw in the most recent report was that continuing claims, or Americans that aren't just applying for the first time, they are needing additional benefits, moved down. And so this is the second time in 2 weeks that we've seen decline in continuing claims. And so this is a good sign, showing that more Americans are returning back to work, similar to the most recent unemployment rate report, showing that 3/4 of those that are unemployed are filed under temporarily unemployment. So showing that there is some optimism for many Americans to get back to work. And the numbers are showing it here that they are coming down. The continuing claims are starting to come down. Again, this is only 2 out of 3 weeks, but this is a move in the right direction, although it's still very, very much high, a very much high number.
Yeah, it's less terrible as you and I have discussed on other shows as well. We're seeing positive signs, and I don't want to diminish those, but let's keep them in perspective, right? We've got a ways to go in the recovery, especially in employment as well. I mean, it's
yeah, and you brought up a good point on Tuesday about the PPP. And maybe unemployment might take another spike once that runs out, and companies are able to actually lay off or cut down their payroll numbers. Yeah,
that's a good question. Let's revisit that real quick, Anthony. So, the question was, or the point was, you've got all these companies coming back online, and we're seeing initial jobs claims ticking down, continuing ticking down. But you've got companies that are coming back online to less demand for their products or their service or whatever that are coming back online. How long can they sustain that? I mean, it's being propped up by the PPP, right?
And then once that expires,
it goes away. Plus, the new terms of the PPP, or the clarity of the terms. I mean, it's like they set it out there without terms, right, on how it is forgiven. But they've extended the time, which, in a sense, if you extend the time, because it's the dollar value, right? So if they extend the time, that means you have to keep less people on the payroll to do it. Do you see this as almost not an incentive, but it allows for companies to right size or have more unemployment? Can we see another dip or another
to meet demand after the loan forgiveness kicks in?
Right. Well, and knowing that it will, because they've got more weeks.
Yeah. What do you think about that, Anthony?
Sure. So when we're looking at this situation, especially with the PPP, I think in certain aspects it is delaying the inevitable for some companies and some corporations. But the big thing is that there will be permanent job loss, and that's going to be the reality for many Americans. We're looking at a complete restart. Even after we're in recovery, industries are going to be changed. The landscape's going to be completely different. And whether or not these companies can survive, or these some companies are not, most companies are not going to be able to go to full staff. And so there's going to be an overhang effect for sure. And that's just going to be a reality, unfortunately, for many Americans. And so those that are able to get back to work in a socially distant and a responsible way, in a safe manner, are going to be at an advantage because there's not going to be a guarantee for many Americans that are going to be able to kind of come back online. And I think that is going to be a definite, a big point for many Americans. One of the big points that we did see from Jerome Powell from his conference yesterday was that, and acknowledging this fact, and that it seems like he is going to be very active and looking to support these Americans that are going to be going through these hardships. So I think there is possibility to have some type of other type of stimulus or some type of support for individuals that are going to be in this position, especially when we saw that inflation was extremely low. This is going to give the Fed a lot more wiggle room to really maneuver when it comes to any kind of financial incentives in this recovery action.
We will have to wait to see on the recovery and how this all pans out, Anthony. You and Zach did Freightonomics yesterday. You guys do that live every Wednesday at 2 p.m. You can go find that on tv.freightwaves.com. What was the topic yesterday?
Yeah, so Zach Strickland and I had our Freightonomics episode. We were joined with Zach Rogers, Dr. Zach Rogers of Colorado State University. He is one of the lead professors that puts together the Logistics Managers Index, and so that was another awesome episode with Zach and Zach, kind of going over the new recent findings of the most recent month for the LMI, and really breaking down the logistics industry component by component to seeing what changes there have been over the last few months and what future expectations are. So definitely, I think a great episode, very insightful as always whenever we have Dr. Zach Rogers from Colorado State on air with us.
Thank you very much, Anthony. And you can catch out the audio version on our podcast channel, Freightcast, anywhere you download your podcasts. Right, Michael Vincent?
Yes, you certainly can.
You can.
Absolutely. Thank you so much, Anthony.
And our next guest is joining us right now, and it's Hunter Whirley, managing partner of FPC Riverwood. How are you doing today, Hunter?
Doing well, sir. It's a pleasure to be here with you.
Hey, Hunter, can you give us a little background on yourself and FPC Riverwood, just to give some context from the perspective?
Be glad to. So, FPC Riverwood is part of the FPC franchise. We have 62 franchises across the nation, coast to coast, working in all different disciplines. Ours specifically works in distribution, transportation, and logistics, helping leaders in industry find top talent to bring their team to the next level to be able to achieve all the goals that they're wanting to bring.
Excellent. So we spoke the other day, and so what was your experience through the crisis? What are you seeing right now, I guess, and what are your expectations for the future from that aspect? I broached the subject of saying I guess you guys were pretty much doing nothing during the crisis, right?
No. Definitely not. So what we actually saw is that we continue to work through, and with transportation, distribution, and other people who are moving critical items to keep Americans alive, they were just as busy, if not busier in some segments, like whenever Zach was talking about produce, cold storage, food, things that are basic needs for humans. We saw, 150% jump in some companies having to be able to build their teams to meet demand. Demand changed from restaurants going into grocery stores, but building those teams out to where they could achieve what they needed to, it was definitely not a downtime for a lot of companies. Unfortunately, a lot of people were very, very adversely hit by Corona. And we're starting to see a little bit of movement coming back. And, it's what we're seeing is it's like watching dominoes fall. It's not this gate that everything opens up and bang, the economy's back. It's this industry opens up. Well, now it needs support here. Now it needs support here. And we're starting to see hiring in these areas just kind of stair step in, if that answers your question, Mike.
Yeah, it certainly does. Did you have a comment?
Yeah, I mean, what trends are you seeing right now? I know that there's those trends back during the shutdown, but now that states are opening up and everything's getting back online slowly but surely, what are your expectations, and what are the trends you're seeing right now in hiring, both at the warehouse level, executive level, just all through the ranks?
Gotcha. Pardon me, I've got a little bit of delay going on here. So
no worries.
What we're seeing is critical industry will always be there, but as we start to see the summer open up, I can't look into my crystal ball that well and tell you definitively, but say tourism opens up a little bit. Well, that helps aviation. That helps oil and gas. That helps, everybody across. And as things start to open up, I'm starting to see, a lot more movement than we have had in the past 2 months in support of automotive. It seems that a lot of tier two, tier one folks are starting to come back and prep that pipeline, because you can't just turn a switch and the supply chain comes on. People are starting to take note of businesses coming back. And what I'm seeing as a trend, what I think we'll see is, kind of what I told Mike, is professional musical chairs. You've had people who have been furloughed. You've had people who have been laid off. And as Q3, Q4 roll around, brush up those resumes, make them, make yourself as marketable as you can, because I think there's going to be a lot of movement.
Very interesting. So you're seeing movement in the industrial side, and I know what you said your expertise was, or I guess your focus was more in the logistics, et cetera. But so on that service side, are you seeing it from there as well on the service side, or consumer side, retail side of the economy? Do you play in that area as well for recruiting?
We'll work largely with their supply chains, but retail's one of those that is coming back slowly. And it was funny hearing Anthony talk about the PPP and then having people at home, and what is that doing? We're seeing locally some of the leaders that we know having to struggle to get some of their retail employees back. It's not as enticing to come in right now.
Yeah, that's another solid point. I was going to ask that is you're seeing the trends that you're seeing are on the demand side that you've been talking about for employees and for recruiting. How is the talent pool? What are you seeing on that side? Are they readily available, or are they like, nah, I think I'll hang for a while?
Still finding professionals, because largely who we're working with, our sweet spot is managers to vice presidents.
Gotcha.
Finding professionals. There are more professionals on the market now than we've seen, back whenever we had 3.5% unemployment. But what you're seeing is if you open a roll up and say you're the HR specialist that posts a job, well, where you might get 20 or 25 resumes, you're weeding through 150 or 200 now. And so it's taking the time to actually go into industry and find the correct leader that, we're seeing. There are more people on the market, but that also means a lot more screening for hiring managers.
Gotcha. So
it does. We did a podcast yesterday, or a show, Put That Coffee Down, where we had our weekly survey, and we surveyed sales professionals and if they're looking or not, and quite the majority are just happy where they're at right now. I thought there'd be a little bit more movement, say with those sales professionals, but it was
you're talking to current sales professionals happy in staying where they're at as far as employment, right?
Very few, like maybe 20 or 30% are looking actively, which I thought would be a little bit more. And it kind of goes to your point, Hunter, where people are kind of, people who are employed are kind of sticking to where they're at right now. Is that fair to say?
Yes, and largely what I'm telling people right now, my counsel is, if you have a good job and you have stability, do not do anything to fracture that. Stick where you are. That would be my counsel. A lot of the stuff like you're talking about in sales, the only thing that will move the ball forward a lot with sales is instability, and there are people who were recently laid off, or their company has, drastically reduced their sales force, and they're looking out. But, talking salesmen and sales professionals, a lot of the market, the pay is much the same from company to company to company. The bonus can change a little bit, but there's a range that they're going to look at. And if they have stability and don't have to change their book of business or what they're doing, it's hard to get people who are in current sales roles to move.
It is, yes.
It does make a lot of sense. I would think in normal times that would make a lot of sense, but especially now when you're like, I made it through, I'm essential.
Yeah.
I don't want to go somewhere else. And it's, you some of these positions are opening. I would think that people are looking at them like, okay, this company's coming back online and they're expecting growth, but how confident are you in that growth? There's nobody that's saying, yep, we are definitely on the path to recovery. So there's a little hesitancy there as well,
Yeah.
I would think.
And going back to Hunter's point about putting pressures on the logistics industry and travel and tourism, I just looked up the TSA checkpoint travel numbers, and we're averaging over the last week about 400,000 passengers per day. I mean, that's still compared to 2.5 million last year, but that is fourfold, 400% increase over middle of April, where the average is about 100,000 a day. So,
Yeah, right.
so
Yeah,
people
I
are
think it was
flying again slowly but surely.
Memorial Day, we saw 225 or something.
About 225, so it's bumped up from there as well.
That's good.
Definitely has.
Hunter, thank you so much for joining us today. Very insightful. It was very interesting. We'll have to have you on again. Maybe on Put That Coffee Down, I think would be a good one as,
It would be a very good
as
one,
well,
yeah.
right?
Yeah, definitely.
So how do people reach out? How do they learn more about FPC Riverwood?
We are online. You can find FPC Riverwood online, fpcriverwood.com. You can also find us most easily on LinkedIn. And what I'll tell professionals right now is if you're not working on LinkedIn, devoting the time to building your network, please take a little bit of time and build that out. You can find me on LinkedIn. It'll be good for you. It's good to connect. I'm always willing to have a conversation.
Thank you, Hunter, and excellent advice for anybody out there. That's something we preach on Put That Coffee Down as well. Time over time, network, make connections.
Network,
always
build,
be looking for
build your
new
brand
sales.
as well. I think he Hunter build your
Exactly,
brand,
build
spend the
your
time,
brand.
invest in it, do that type of stuff. Yeah, that's what you got to be doing.
It's very
Absolutely.
important for sales professionals to do that. And also, even if you're not a sales professional, guess what? If you're looking for a new job, you're selling yourself. Right, Michael Vincent?
If you're looking for a new job?
If you're looking for a new job, the commodity is yourself, your skills.
Yeah, absolutely.
So
you got to get out there and brand yourself.
Active
You've got to market
branding yourself.
Yeah, you can, the people aren't going to look under rocks to try and find you.
Yeah,
You gotta get
definitely.
there.
And our next guest is joining us right now via Skype, and it's our very own Washington Bureau Chief, John Gallagher. How are you doing today, John?
Hi, I'm doing good, you guys. How are you guys doing?
We're doing excellent right now. And
Hello, John. Mike Vincent here. How are you doing today, man?
I'm good, Mike. How are you doing?
I'm
Yeah.
doing excellent.
So, John, you've been covering some possible legislation coming out about concealed carries and guns for drivers to carry concealed across state lines. Can you explain the background of that a little bit, and then we'll move on to the survey that we did here at FreightWaves to see what the opinion of the trucking industry is.
Right, yeah, there's been legislation introduced a couple times in some past Congresses, and it hadn't really gone anywhere because, as you can imagine, the whole gun rights issue is pretty controversial. But the most recent legislation was introduced in the House and Senate in January of last year, and it's still pending. And we thought we'd just take a look at that and check in with them to see how it's going. And basically, what the bill does, it allows a person who's qualified to carry a concealed handgun into another state that allows for concealed carry. It's called a reciprocity bill. And it's a bit confusing because there's like 37 states right now that already have these reciprocity laws. And the level of reciprocity is different too. There's full, some states have full reciprocity, some have just reciprocity for resident permits, vehicle carry only, partial reciprocity. So what this bill would do is any state that has a reciprocity law and you're authorized to carry a concealed carry permit, you would be able to do that at a much bigger level among all these other states. So it would just basically allow for, and it's not just for truckers, it's for passenger vehicles as well. But obviously, truckers who travel interstate would benefit from that if they have concealed carry.
Now, John, that sounds to me like a huge undertaking because, like you said, it's a hot topic. So you've got special interest groups that want to, limit guns
On both sides. Right?
On both sides, you've got both sides arguing back and forth. But then you, as you pointed out, each state has their own level of permit. And then the reciprocity between those states really gauges is the state where it was issued. Is their standards for gaining that license enough to allow for that person to come into my state and carry? Well, so you got all that because there's states out there where just because you were born there, you just carry a gun. Mm-hmm. And I imagine that if you're coming out of I think it's Montana or something like that, or Wyoming, where Alaska, those type of things, just because you live there, you can carry a gun. That's not going to go well in Illinois, I don't think.
Yeah, and John, what are your thoughts on the odds, the odds of this happening, especially for commercial drivers crossing state lines?
Well, I mean, I just don't. It's just tough, Kevin, just because. the bills are the sponsorship on the bill is very partisan. And so this latest bill, and I mean, even if we're to think if the chances of it passing this year, I mean, it's getting even more complicated with social protests going on and COVID-19 taking a lot of attention. So even if it did have a little bit more balance, it would just be tough at least this year. And I don't know. Gun control legislation has always been controversial, so I don't know. It doesn't seem very likely to me.
Likely, yeah. I probably agree. Let's flash to the survey here that we did earlier this week at FreightWaves and get some opinions from the trucking industry on the possibility of these laws being passed. And our first question here is, how often do you carry a concealed gun on your personal vehicle when not on duty or not in a commercial vehicle? And Cody, if we can flash that first slide up here and show the results. And John, if you can give us your thoughts on those.
Well, I was actually a little surprised. So this is the one if you carry a concealed gun on you on your personal vehicle when you're not on duty.
Mm-hmm. That is correct.
Right?
Yes.
Yeah. I don't know. I was a little surprised by that because if you look at those numbers, you can see like 68. I did just a quick calculation. So 68 to 74%. You could say at some level carry a concealed weapon in their personal lives, whether it's a lot, a little bit, rarely. At some level, 68 to 74% of all those different categories carry a concealed weapon. That just seemed kind of high to me, but maybe I'm just naive about that. But because if you look at the number of concealed carry permits issued in the U.S., it's roughly, on some stats that I saw, it's roughly like 8% of the number of driver's license that are issued. So that's why that seemed like a high number for the trucking industry to me. I don't know if you guys.
But you didn't ask if they did it legally.
No, we didn't. We didn't. And for everyone out there to realize, this is an informal poll, non-scientific, and it covers from drivers to C-level management.
Right. The
242 responses.
Even though this was their personal vehicles while off duty, right? I think it makes sense to me that the highest level of always is in this fewer trucks. You have less corporate, handbook laws, that type of stuff. So they're more likely to be able to carry it from their truck right into their car.
More small business, more about the personality of the owner.
Yes.
Right, where you see in small business. How about slide number 2, Cody? Do you think truck drivers should be able to travel freely between states while carrying a concealed weapon? And there we see a real disparity between smaller fleets and the larger fleets.
Yeah, but it's still pretty big. I mean, this is just a general question, though. I mean, it's just kind of more of a philosophical question if you should be able to carry it. And I could see why. And this poll went out to everyone, right, Kevin, like drivers and fleet executives. So yes. I could see why you could answer it. You could just, from a philosophical standpoint, you could answer it because if you look at the no's, they're pretty small. I don't know is pretty small there, but again, to me, that looked like that there wasn't. You're right. There's a disparity among the different sizes, but it still seems a lot to me. That's even more than the carrying it personally question in your vehicle.
Yeah, I think the 500 plus trucks it shocks me that it's 70. It doesn't shock me, but it's surprising to me that it's that high, 76%. Because because you're saying that you asked fleet managers as well, not just drivers.
Yeah, it's everyone that's a trucking company that is a FreightWaves reader, subscribed to the newsletter. So it's a huge pool. We had 242 respondents. It was just a quick survey that we shot out late or mid-afternoon yesterday, I believe. And this kind of sets the stage for this third question, right? And then you can see the disparity grow among fleet sizes, right?
This makes a lot of sense.
Yes, and the third one is, if it became legal for your drivers to legally carry concealed guns, would you adjust your company policy to allow this? So then you get into legal liability issues
Now it's
because
not just
you become
opinion,
responsible
will you
for.
let them do it?
Will
This
you
is
let them do
different.
it? Should they be able to? Yes. Will you let them?
No.
Well, it's a little bit
Not so
different,
much.
isn't it, John?
Yeah.
Yeah, exactly. I mean, big trucking companies, like any company, I'm sure have, firearms policy for in the workplace, right? Right. I assume for their own company insurance.
Yes,
policy.
it's definitely covered under the workplace. I mean, they're on duty in a cab of a company truck, so the company is theoretically, at least, legally liable for anything that happens.
Exactly. So that makes sense. That stratification there makes sense. Although still, I mean, and maybe we could say that even that 38%, maybe that didn't come from executives in the company. That could have been just drivers.
Yeah.
That think that the policy, or answering that they think the policy would change.
I think you have 38% drivers, 21% C-level upper management, and 41% are like fleet managers, brokers.
Yeah, fleet managers.
That would be my guess.
And I would say that less than 50 trucks, a big majority of those are probably owner-operators, 1, 2, 3 truck type of outfits where, their business truck is their own company. So there's this very blurred line between business and personal property on that.
It really shows the difference between opinion and then when it comes down to, okay, how does this position my company from a legal standpoint, right?
Yeah. One last question for you, John. We're running short on time, but let's flip gears a little bit and go into the drug clearinghouse, and what are they finding are the biggest infractions so far with the use of controlled substances?
Yeah, it looks like marijuana by far topped the list. It was like more than 50% according to this latest. It looks like this was the most comprehensive stats that have come out of FMCSA since they started the drug clearinghouse in January, and marijuana was like 50% of all the violations, and which I guess isn't that big a surprise, but it could also might point to the issue that with these different states with the different marijuana laws, you might still have drivers who are legally able to take marijuana. But still get caught up in the federal violation because it's from the federal standpoint, it's a Schedule 1 controlled substance. So you can't have a CDL with that with obviously if you're interstate truck driver.
I think that's a perfect explanation for what that is.
Yeah, thank you very much for your time today, John. How do people reach out and give you story ideas and leads?
Jay Gallagher at FreightWaves.com, and my Twitter is at JA Gallagher.
Thank you very
Excellent.
much, and you
Thanks,
can find both the gun articles and the drug clearinghouse articles on FreightWaves.com right now.
Yep.
Thank you, John.
Thank you, John. Have a great day.
Thanks, you guys. Bye-bye.
You bet. So we have some viewer comments here, and I think they're talking about the interview with Hunter. Go Army, thanks for your service. 11B here, and that's from Tony Anderson, Director of Business Systems here at FreightWaves. He's our Salesforce engineer. And Kenneth Carter, 88M here, let's roll. And Tony Anderson, thumbs up back to Kenneth Carter. So
there you go. Excellent. Go back to that drug. So how... You see on a little blip on the drug infractions, not identified.
Yeah, who knows?
We know it's illegal.
We know it's illegal, but who knows what it is, right? I don't know what it is. And it's a very interesting chart that we have up right here, and that's embedded in John's article on FreightWaves.com. Drug clearinghouse. They're on the front page of our website right now.
Yeah, excellent stuff. So
let's go from guns and drugs to good news.
Are you anti-drugs and guns? Is that what you're saying?
Well, I'm not anti-drug. But,
All right, yeah, let's do some good news. So, Travel Centers of America announced its 7th annual Citizens Driver Awards. Herschel Evans of Bremen, Georgia, and Jerry Seaman of Huron, South Dakota are the award winners. The award recognizes professional drivers who demonstrate traits that bring a high level of respect to the truck driving profession, including good citizenship, safety, health and wellness, community involvement, and leadership. The goal of the Citizen Drive program is to put a spotlight on some of the most extraordinary drivers today and illustrate the fine examples of professionalism embedded in the truck driving profession, said Barry Richards, president of TA, told the Trucker. These drivers dedicated their lives to their career, and we're pleased to honor them. We are pleased to honor them and highlight their lifelong commitment and sacrifices. So Herschel Evans has 32-year driving career and is currently employed by Holland Incorporated, has logged 3.1 million miles, no accidents.
That's a perfect record.
And Evan has chosen the Pediatric Brain Tumor Foundation Safety Drive for a Cure as his charity to receive the $2,500 donation. Amen, Herschel. Nice move there. Jerry Seaman, Huron, South Dakota, has 48-year driving career and has chosen the St. Christopher Truckers Relief Fund as his charity to receive the $2,500 donation from TA. The Vermilion, South Dakota TA Express will soon be dedicated in his name, and I should say back there, the Petro in Atlanta, Georgia, will be dedicated in Herschel Evans' name as well. So they dedicate a truck stop to their name. So.
Whether they're all great causes and great recognition for the drivers who are able to take those winnings and donate those to a great cause.
Yeah, absolutely. Absolutely.
A viewer comment here from Brendan Dawson. He's a dragon slayer. So, but who wants to underwrite a motor carrier with an open carry policy? Yeah. Right? So it's a very, very good, legitimate question.
I agree with him, and I think that showed in the numbers, right? Opinion is yes, but then when you come down to how do I get insurance, et cetera.
And I think insurance companies would have a lot of say, probably more say than any of the people working in a trucking company on whether drivers would be able to carry open carry. Right. I think that.
Agreed.
That is definitely. So what do we have coming up this afternoon on FreightWaves TV? I think it's Freight Forecasting at 4 p.m.
We do have Freight Forecasting at 4 p.m. And Jason Miller, Associate Professor of Logistics at the Eli Broad School of Business in Michigan State, will be with me. We'll be talking about the current economic trends, but really looking at the outbound tender rejections, the volumes of truckloads, and what we're looking at moving forward, but also heavily looking at this trend to want to lock down pricing, right? The shippers wanting to get this cheap pricing lockdown.
Yeah, lock down that and contract rates. I'll definitely be watching that. It should be lively with you and Jason Miller.
Yeah, 4 o'clock.
Discussing it. Two lively people with firm opinions, certainly. So we have that at 4 p.m. Tomorrow at noon, 12 p.m. Eastern Time. Our noon show is What the Truck, where Michael, Vincent, and Tuner will be talking about, what will you be talking? Do you have any guests that you can actually share with us? Or is it all a surprise?
Oh, it's another surprise that we have coming on tomorrow. It's going to be a great show. So I would not miss it. We're going to knock it out of the park again. Right. I guarantee you.
So Tuesday on Great Quarter Guys, Andrew Cox and myself, we're joined by Seth Holm, who's working remotely right now, talking about auto manufacturers, kind of trends in that. We talked to a little Nikola, a little Tesla, and then kind of, how automakers can move to profitability coming out of the COVID-19 crisis and ramping that up. So we have that, and Wednesday, Tuner and I did put that coffee down, and it's all about gearing up for that second half of sales. We're in halftime right now. July 1st is the second half. What can you do? We had Brent Orsuga from Pinnacle Growth Advisors, who's a recruiter, sales recruiter for the industry, and he talked a lot. A couple of things that he said that have stuck with me is there's only a couple things you really control in the sales role, and that's your activity and your attitude. And as long as you're pushing yourself with both of those, everything else, you're going to put yourself in a position where you can get lucky.
Yeah, I
Where luck will
imagine the
find
advice on how to keep those two on the positive is crucial right now. It's been
It
first half has been very difficult for salespeople.
It has, and
to
that's
keep
what our
that
polls
momentum
show
going is
too.
going to be
That
tough.
the first half, about 70% of our respondents to our polls said the first half of this year far exceeded in the toughness factor of 2019, which wasn't a great year for especially freight brokerage with rates and capacity.
No, it certainly
going
wasn't.
haywire.
Hopefully, the second half of this year is going to go crazy.
Hopefully it is. Hopefully it
Right?
is. I'm very positive for it. Are you positive for it, Michael Vincent?
I am. I'm cautiously optimistic, and usually I'm cautiously pessimistic, but I'm cautiously optimistic.
Good.
right now.
Well, that wraps it up for this midday market update. Join us Tuesday at 12 p.m. for our next episode.
Peace and love.